Everyone, how's it going? It's Thomas back at you with another video, and today we will be discussing another IPO company. It's Weber Grills. They just went public today, and so I'm going to go do an analysis of their S1. And this time I'm also going to include timestamps in the description for you guys, so that way you can jump to the parts that you are most interested in. That way I can also see where the interest is at. I want to make these as useful to you guys and as enjoyable to you guys as I possibly can. So without further ado, I'm going to go ahead and jump over to their S1, and I'm going to go ahead and go through it, give my reactions to things that I've noticed on it, things that I think are important, things that I think are important for you, and then obviously some opinions that I've had on it. So they just went public today, and with that, I can give a little bit more detail with some aspects and less with others. So the first thing that I'm going to point out for you guys is the existing market cap as we know it. So since its initial launch this morning, it's sitting at about $16.60 per share. Multiply that by the shares that we have, it comes out to at least $750 million. So they're looking at a $750 million cap. Obviously, they are probably a little bit higher than that, but I don't have the exact data on that off the top of my head. And so, we'll have to see where that goes. So now, obviously, the next thing that I want to jump to is the dilution of the stock. And this was kind of interesting for me. So usually we expect somewhat of a decrease or a drop with how the stock is going and where that is headed. But this time, they anticipate that the stock itself is actually going to go up in value, which is not something that we've really seen before. So it's anticipating $16 to start. And when diluted, which usually brings down the price, they estimate that it's going to go up by $2.63 with everything else factored in. Now, so far, it's not reached that price, but it is at the $16 mark, which they anticipated. So I think they're off to a good start, but we'll have to see exactly where it goes from there. I've got some hesitation with that, and I will expand much more upon that as I go through this clip, or well, through this whole video, not a clip. So the next thing, and obviously to me, the most important thing, is the cash flow of the company. This is one of the biggest factors when it comes to investing for me. And folks, we have something that I have not really covered yet. We have a company that has consistent net income. There is not any hint of loss within the last 4 years, which is incredible to me for reasons that I'm sure all of you know. So far, most of the other companies that we've covered have had losses throughout each of the years. Not this company, not this time. So the net sales each year are between 2018 to 2020, they had over $1 billion in sales. Now, obviously, again, with 2020, we have to make the exception with COVID and how that affected things. So they hit only 500 million. And then this year, they've been able to hit 963 million. So they will probably break that 1 billion mark again. But we'll have to see with how the rest of this year plays out, especially since they just went public. But I see them reaching that 1 billion mark, no problem. Now, one thing that stood out to me that was a red flag was, again, just the cost of goods sold. Their operation costs here are very, well, not operating costs, but it factors in. They're very high. We've got very high numbers here. We're talking roughly about 40% in the 40 percentile of how much it's factoring, except this year in 2020, and not this year, but last year in 2020 with the 358 million, and then this year with 542 million. That is a really big, that's more than 50%. So that is a concern to me, just with how much it is. But the fact that they're able to turn profit each year, I'm comfortable with them spending that money, with them making that. Since they're not turning a loss every year, I consider it an okay with hesitation. You know, we've seen a lot of companies where they spent a lot of money and they don't have the net income to back it. They don't have the growth to back it. And this company, Weber here, has been, you know, pretty good about keeping a return. Now, obviously, you can see it's kind of been an up-down sort of deal. However, positive return is positive return. And, you know, everything changes throughout the years. So we will have to see how that plays out going farther down the road. So the next factor here that I'm going to cover are going to be the underwriters of the company. So the underwriters of this company, they've got some really big names backing it. They've got Goldman Sachs, JP Morgan, Citi, and Wells Fargo. And, you know, I have my hesitations with Wells Fargo. They're basically the Robin Hood of banking. But, I mean, they've got Goldman, JP, and Citi backing them, and a lot of other big names. So they have the funding to this, which is great to see. I mean, obviously, this could be really bad if all of these underwriters choose not to buy in and they all choose to sell out. You know, that could be a bit of a hit to the stock. But the fact that they've got such strong backings is a really good sign for me. I do like that they got some really big names in this and that they've kind of got that confidence, if you will, that's behind the company itself. But with that being said, the next thing we have to cover is the shareholders, which does matter. Now, this shareholder situation is not something that I've seen before, and I'm sure there's probably more information out today with where everything's at. It could be updated, but very blank sheet, if you will. These are very small numbers. There's not a lot being shown. It's the one shareholder that we know that exists is Kelly Renko, and she holds 135,000 shares of Class A stock, and she will apparently own Class B, and we'll have to see what she owns from there on out. But no one else in the company seems to own anything, at least not yet. And maybe that was just undecided at the time. Now, this is an S1A, which means it's a revised version of the original S1. So this is the updated version. But I'm not sure where the rest of the investors are. It's kind of a strange case to me. Obviously, these numbers don't necessarily add up. So it's kind of interesting to me. But also, BDT Capital Partners owns 30% of the shares, which means that the company itself, as of right now, with this information that we have, is not run by the board of directors. It's run by an investor in the company. So BDT is an investment bank company. They are based out of Chicago, I believe, or at least based out of Illinois. And I mean, they're not a bad company as far as backings go, but I think it's fascinating that the board of directors itself does not hold any shares in the company unless, I mean, there's an updated version out there. If you guys find something like that, please let me know. I'd love to see it because this is a very interesting case. I have yet to see something quite like this. However, it doesn't really stop here, because when I say that the board of directors does not run this company, based on what I'm seeing here, I literally mean they don't run this company. And I'm going to jump over to the management of this company and show you guys what it is that I'm talking about. So the management in this company, we have the people on the board listed here. And the one shareholder that was mentioned was Kelly Renko, who is a non-executive chair of the board. So one person on the board who's not even an executive holds the most shares in this company. And I'm not saying that she's not qualified or that she's not a possible good leader. I don't know anything about her. I mean, we read down here the little bit of the description that's given. She served as vice president of Goldman Sachs, and she has experience with investment banking. She's the director of Peet's Coffee. I love Peet's Coffee, and it's kind of a shout out to my home state. and Caribou Coffee, which also good coffee. I'm a big coffee person, so that's great. But she has the experience, and the fact that she has ties to Goldman Sachs kind of makes me wonder if Goldman Sachs was maybe swayed a little bit into investing with this company. However, I can't imagine that too much of an effect there. But it's very interesting that no one else here holds shares. I've not seen this before. And so, if you guys know something about this that I don't, please let me know. I'm very curious to see what exactly this entails. And so the next part that I want to jump to is the dividend policy. And so far with most companies, we've seen they have stated that they will not be issuing dividends. Not the case this time. It says, assuming Weber Holdco LLC makes distributions to its members in any given year, the determination of a dividends, if any, to our Class A common stockholders out of the portion, if any, of such distributions remaining after our payment of taxes, tax receivable, agreement payments, and expenses will be made by our board of directors. So they are going to be offering dividends if permitted by the board of directors and by their shareholders. So in this dividend policy, which is listed, they do not state that they will not be issuing dividends, which is kind of exciting to see. We've had every other company so far say they have not authorized the issue of dividends. They've not issued dividends thus far. And that always changes. But this is one of the few companies from the get-go that's saying, yes, we might do it. Now, it's not a guaranteed yes, but they're not saying no right now. So you could possibly expect dividends by investing in this company in these next few days. And since they're not part of the IPO access and Robinhood and with other companies that I know of, you don't have to worry about that sellout 30 days from now. There's a lot less revolving around this company as far as the risks are applied. But speaking of the risks, let's go ahead and take a look at those. And, I read through each of these, and there are no risks that I found necessarily noteworthy that would impact my decision to invest in this company. Now, the only thing that's maybe a little bit out there is our results of operations are subject to significant fluctuations due to the impacts of both extreme weather events and unusual or poor weather patterns, which could cause a decrease in revenues and operating results. Which makes sense. I mean, they sell grills, and nobody's buying a grill in the event of a hurricane or a flood. So, it makes sense. But there's nothing here that's outlandish as far as the company itself looks. There's no risks here that make me think, okay, there's something that's such an external factor that it could go south very quickly. They don't seem to be in a position where they're out of control with their company. They seem to have a good grasp on where they're going with this, what's going to happen with it, and what can be expected with it. So that's really everything that I have to cover in this. It's not as extensive as I would have liked. I admit there's places that are blank, such as with the shareholders, that I wish I could have filled in. But personally, I kind of like where this company looks standing so far. I like that they're not influenced by too many factors. Now, the fact that the board of directors doesn't have shares in it is a little bit concerning to me, but they are not showing a ton of red flags, which is great for me. And the fact that they have positive returns is also great for me. So I am considering investing in them. I am open to this idea, but let me know what you guys think in the comments below, whether or not you want to invest in this company, whether or not you think it's a good investment. Maybe there's something that I missed. Please let me know. As always, make sure to like, share, comment, and subscribe for future videos. And I will see all of you guys again in the next video.